Shut up and sit down.
And now, streaming live from the sunny Southern California coast, this is Options Uncensored.
Hey everybody, I'm Steve. Welcome to Options Uncensored. We're making real option trades in real time together. Let's get right into it. First things first, make sure you have your brokerage account open so you can follow along. Have your YouTube video quality set as high as possible. That way you can read the numbers a whole lot easier. Have a calculator on hand so you can do some easy math. If you have a question or a stock you want to go over together live, leave it in the comments section and we'll do it together. And finally, remember, this is not financial advice. This is all for entertainment purposes only. All right. Happy 2024, everybody. A new start to a new year. Let's go over our open positions. Up across the board on most things, down a little bit on IWM, XBI. Our TLT position filled this morning, so a win to start the year. That's always a nice start. We'll go over that one in a second. DIA, we're trying to get to 32. We're at 88, down $22, not bad. Roku trying to get to 34. Right now at 109. This was a roll from December expiration. AMD flat, trying to get to 34, 69. SPY, same thing. That was a roll. Got a lot of work to do on this one, but we have a couple weeks here till January expiration. We can always roll till February if we have to. Same story with IWM. Down a good amount. I think we're right at the 200 strikes, so we've got some time to have this one work out in our favor. XBI, same thing. I think we're doing okay. We got plenty of time, okay? Let's go over the TLT trade really quick, and then we'll move on to find some new opportunities to start the year off. So we opened a short call spread on the TLT. We sold the 103 and we bought the 106. So the 103 is right here. I think we did this either on the 21st or the 20th. So we sold the call spread here, short call spread here. With the holidays and everything, it lost some theta, some premium built into it, and it moved in our direction this morning. So the trade closed out. $19 is what we made. And we risked, it was a $300 spread. If you take your calculators, 19 divided by 300, 6.3% return. Not bad at all. That's a good one. I like this trade. We've had this big move up like everything, including the bond market. Had full pullback here, in and out. Okay? Easy, straightforward. Let's see what new opportunities we have to find. Starting off with Apple, a very mean downgrade today from, who was it? Was it Barclays? I can't remember. Downgrade from iPhone sales. Who was it? Oh, well, yeah, from Barclays to underweight. So that's a very odd move to make. Earnings are February 1st. So we are trading now February earnings. Sorry, February expiration. So earnings will be included in this expiration. We'll get rid of January here. February, 45 days till expiration. So yeah, exactly 1 month till earnings. We've got some time to get in and out. If you want to sell the 170, buy the 165, what do you get? We'll take 121 minus 78 divided by 2 divided by 500. Only 4.3% there. Not that great. You could, I mean, since it's Apple, you can just sell the put straight out without buying the 165. It's okay. Where's 170 on the chart? 170 is way down here. 170 is right about here. Doesn't mean it can't get there, considering there's earnings as well. I don't know. It's an interesting one. You got the 200-day around 180. So we'll keep Apple. We're going to follow up with Apple. If a sell-off continues, we'll sell some puts at 180. But not yet. Okay. Hold on this one. Next up, BP. In the news today, I think they got a downgrade as well. Earnings are the 6th. No news here, but I think they got a downgrade today. Not very volatile, so that's not going to help us. Earnings are the 6th, so that would be included in the pricing here. I think right off the bat we're going to skip this one. We'll look at USO and XOP in a minute, but this would be an oil play. Moving on. Rivian. We'll look at both Rivian and Tesla. They both had their Q4 and total year car sales. Both pretty much came in line. Tesla slightly over. So here's Rivian. I know it says delivery slipped 10%, but they came in line with expectations. Earnings at the end of February, so that's not included in February expiration. Let's look at the put side. You'd have to sell 15, but there's nothing to buy, nothing to buy at the 10 or the 12.5. So maybe hold on this one if the sell-off continues. But the call side, you'd have to sell the 27.5 and buy the 30. It's 49 minus 26 divided by 2 divided by 250, 4.6% return. It's okay. Call skew. You could pay more to sell the call side. Where is 27.5? Oh boy, what an ugly chart. 27.5 is right about here. That seems fair. And considering earnings aren't included in this, that seems very fair. All right, let's look at Tesla. Flat reaction. And like I said, their numbers came in line, so there's nothing, if anything, slightly higher than what was expected. Earnings at the end of January here, so we're a little too close to earnings to do anything yet. We'll wait till after earnings and see if there's a position to open. K-Web. Let's also look at BABA. News out of China about poor market conditions for the year. So the entire sector's down today. Not by much, though. Still hanging out in no man's land, so there's no clear direction. If it continued to move down, you'd want to sell puts. If it continued to move up, you'd want to sell the call side. So on the K-Web, as far as that goes, nothing to do here. Let's look at the FXI. This one's a little more interesting. If it got down to 21, 22, or 21.5, I'd sell the put side. I don't know if there's anything to do here yet. Skip the put side. Call side. Yeah, if you could sell 26 and buy 27, that's kind of silly. Let's look at Alibaba. BABA. Down 3% today on the news. Earnings are February 22nd. I'm not sure if that one's included in expiration. Possibly. Yeah. Here's the chart. So we didn't forget for it to get to around 61, 62, and then sell the put side, so we're not there yet. An ugly chart, very ugly chart, but it's had this long bottoming pattern here. So this could be the next move up, or it can continue down, but it's down so much already. Let's look at the put side. If you sold for February, you'd have to sell 65 and buy 60. 67 minus 27 divided by 2 divided by 500, 4% on the nose. That's no so good. The call side. You'd have to sell 85's awfully close, but that's what you'd want to sell. Sell 85 by 90. 123 minus 68 divided by 2 divided by 500, 5.5% there. Where's 85 on the chart? 85 is right about here, just slightly below the 200-day moving average. If it continues up, you should get resistance between 82 and the 200-day. So if this rally continues up higher, say around 84, then I'd sell the call side. I'm not crazy about selling the call side now. I don't want to sell the put side either. Same thing, kind of in no man's land here. We'll keep Bob on the list. We'll keep checking in, but not yet. Let's look at oil. First USO, then XOP. It was up higher to start the day. It's kind of selling off a bit. No earnings to have to worry about on this one. On the put side, if you sold the 59 and bought the 55. 82 minus 43 divided by 2 divided by 400, that's 4.8% there. Call side, if you sold the 75 and bought the 80. 86 minus 33 divided by 2 divided by 500, 5.3% there. Interesting. A little bit of call skew, but not that much. Both sides are fairly priced. On XOP, here's our chart. Same thing like USO and no man's land, slightly above the 200-day, but no clear direction. We've gone over this chart a bit. We have this ascending trend line, which it hit back in early December. Remember, we sold the put side here in early December and made our money. But we also have lower high, lower high, lower high. So we also have a descending trend line. Something. I don't personally use Bollinger Bands, but if you use Bollinger Bands on this chart, it's getting tighter and tighter and tighter, and that means we're going to have some volatile movement either to the upside or to downside coming soon. We just don't know yet. So I'd rather wait for that volatile move to happen and then sell the side it's moved towards and collect the premium because volatility will expand at that point. Not the move to make yet, unfortunately. I hope that makes sense. Call side, you'd want to sell. 150 is a little close and 155 is a little too far out. If you sold 150 and bought 155, 167 minus 92 divided by 2 divided by 500, 7.5% if you sold the call side here. It's off. It's a little close. That's why you're getting paid for it. Where's 150 on the chart? Right here. If any more of those tankers get blown up in the Red Sea, this thing will keep moving higher. I don't know. We got to wait for something to happen first, okay? Moving on, Marathon Digital. We looked at this one last week. It's been very volatile. That's good for the option prices. This chart movement from late October to the end of last year looks very similar to a lot of other charts, and now this is bubble movement right here. This vertical move up is unsustainable, so now you're going to have all these bubbles popping and coming back. I know we're very heavy on short call spreads, but if this movement continues both in the averages and individual stocks, all these will come back in our favor. I don't know about this one though. Call side, well, first one are earnings. Earnings are February 29th, so we got plenty of time. We already looked at the chart. On the call side, if you still want to get in and sell the call side, this one's tricky. Sell 38 and buy 44, or sell 39 and buy 44. Let's check it out. Selling 39, you get 212 minus 163 divided by 2 divided by 500. Just about 5% there. Not crazy about that one. Put side. Crazy. You sold 18. That's awfully close. Sell 18 by 13. That's 188 minus 48 divided by 2 divided by 500. Did I mess that up? No. No, you get paid for it. Just the 18 is awfully close. Where's 18 on the chart? 14% return. That's why. 18 is right here. Interesting. If we went out to if you sold, this one's hard. This one's really hard. If you sold 14 and bought 11, what do you get there? 67 minus 25 divided by 2 divided by 300, 7% there. This one's hard. Son of a gun. Let's come back to Marathon. This one's tempting, but it's... Numbers a little wonko on this one. All right, let's follow up with the firm. May have missed the boat on this one. Been looking to sell the call side. We tried a couple times last week to open a position, never got filled. So unfortunately, the move has already been made. Earnings are in the 7th, a little more than a month away. Yeah, we tried back here somewhere to open the call side. Would have gotten filled today. Maybe too late on this one. If you sold 65 and bought 70, that's 171 minus 121 divided by 2 divided by 500, 5% on the nose there. Pass, call, sorry, put side. If you sold 30 and bought 25, yeah. Actually, you'd want to buy 22.5. Sell 30 by 22.5. That's 81 minus 22 divided by 2 divided by 750, 4%. So you'd want to sell the call side still. All right. Nah, pass on this one. End phase ENPH. We're looking for it to get to 150. Big loser the past year. Volatility is starting to come in our favor. Like I said, between the 200-day moving average and resistance right here, looking to sell around 150. Anywhere between 146 and 155, it should get resistance, but not yet. Getting closer. Hold. Let's check out the gold market, GLD. Still moving up slightly. Then we're going to hold on this one. You still want to sell the call side, I'm sure. If you sold 200, bought 205, it's 159 minus 88 divided by 2 divided by 500, 7.1% there. 200 on the chart. Hold on, 200 is way up here. I don't know if you could see it. All the way up here. The reason the call side's more expensive is because we know rate cuts are coming, and gold will go ballistic when rates are cut. So the gold market's sniffing that out. Like I said, for the past couple weeks, wait for gold to make another all-time high, then we'll sell the call side. We're close. You get paid 7% to sell the call side, but not yet, okay? Let's go to our IV rank scanner, and we'll sort by volume. Tesla. We already looked at Tesla, right? Has earnings on the 24th. We'll hold on that one. Apple. We already looked at Apple. Hold on that one. The IWM. Let's take a look. We have a position that has January expiration here. We sold the 197 and bought the 200. So here's our once. The short strike is in the money and the long strike is barely out of the money. But like I said, we still got time. If you want to open something new today for February expiration, same thing, sell the call side is what I do. Sell 214 and buy 222. It's an $800 spread. 157 minus 60 divided by 2 divided by 800, 6%. That's not bad. That's actually, if I wasn't in my position, I'd sell that one. Sell 214, buy 222. Yeah. Where's 214 on the chart? 214's right here. For February expiration, that seems awfully close, actually. Huh. What about the put side? I wouldn't sell the put side here. I'd wait. But if you did, selling 185 and buying 178. So that's a $700 spread. 144 minus 80 divided by 2 divided by 700, 4.5. So yeah, call skew still. I'm getting paid more to sell the call side. Okay, moving on. AMD, we're in our AMD position, right? Yes. Mine is up $6 today for January expiration. So, what have we got? Short the 150 and bought the 155. So down big today, definitely moving in my favor. Up $8 right now, trying to get to 34. If you're not in this one, earnings are January 30th, so I wouldn't open anything new today. I'd wait till after earnings. Amazon. AMZN probably have earnings coming soon, the end of January, I'm guessing. February 1st has earnings, so we're exactly a month away. Could get a bounce around 140, 148. And actually, this may be the bounce already. This was a tough one. Put side, if you sold 130 and bought 120, it's 136 minus 54 divided by 2. That's 4.1%. Not that great. Call side probably has call skew still. Actually, I'd skip it because the 165 is too close and the 170 is too far out. If you want to be gutsy and sell the 165, that's 204 minus, and then buy the 175. Minus 76 divided by 2, that's 6.4%, risking 1,000. But like I said, the 165 is a little close for comfort, and you still have call skew because the momentum on the upside psychologically is going to be hard for people to get away from. Okay, moving on. Amazon Marathon we already looked at. Microsoft. Remember, now that we're in January, the holiday season is over, and we have earnings season starting in about 2 weeks or so. We're going to have a lot more volatility priced into these options. IV, especially IV30, is going to be more expensive. The IV90 that I also check won't be as volatile, but the IV30 will be. Microsoft, earnings are January 23rd. Too close. Moving on. I like to avoid earnings if all possible. Coinbase. I think I missed the move on that one. Pass. Pfizer. We got that big event on the 8th. So maybe some good news for them. I'd rather trade Moderna. TLT. We already looked at that one. Meta has earnings, I know. That's why it's up. Let's take a look. Meta's earnings are January 31st, so that's priced into February expiration. Too close. Very calm chart, though. So any crazy movement will increase volatility. Just because it's such a very boring chart. It's had this very slow rise up last year and then sideways movement. So any big down day like we have today is going to spike volatility. Google. Riot? No. Intel. We already have AMD open. Trade AMD, not Intel. And they've got an event on the 8th. What day of the week is the 8th? That's going to be a big day. Next week, Monday. So next week, Monday will be fun. Intel, silver, stick to gold. Google. Moderna, we already looked at. Bitcoin ETF. What time are we on? Let's check it out. BITO. I know Bitcoin has been on a tear. Up 8%. Call side. Liquidity is not the best on this one. You'd have to sell 28 and it's too illiquid. Put side. Same thing. Hardly any volume. Too illiquid. FXI we already looked at. Snapchat. No, they have earnings. I'm coming up, I'm sure. Netflix earnings on the 23rd. PayPal. Earnings for PayPal are February 8th. So it's more than a month away, but it is included in February expiration. Keep that in mind. Maybe sell the call side still. You get paid for it too. If you sold the 72.5 and you'd have to buy the 75, that's awfully close. If you bought the 80, it's really far out though. 98 minus 40 divided by 2 divided by 500. Hold on, messed it up. 98 minus 40 divided by 2 divided by 500. 5.8%. That's okay. It seems fair. Where's 72.5 on the chart? 72.5 is way up here. Earnings again, really quick. February 8th, that's why. So we've got about a month for it to move in our favor. If it doesn't, it'd have to hold through earnings, which is not ideal. Let's move on. ARC, no. Boeing. I wanted a revenge trade on Boeing, but we have to wait till after earnings. I know earnings are the 23rd or 24th or something, so wait on Boeing for that one. Citi has earnings on the 17th. Same thing, Bank of America in January earnings. ExxonMobil. Let's check out ExxonMobil. No. No. A little bit of volatility, but not much. Pass on this one. All right, next page. AT&T. Earnings on the 24th. JD, no. USO, we already looked at. Upstart. UPST. Earnings February 13th. We've got some time, but this is included in February expiration, the earnings, so keep that in mind. Call side. Sell 57.5 and buy 65. Or what if you sold 60, bought 65? That's 191 minus 146 divided by 2 divided by 500. Only 4.5% there. On the put side, if you sold 22.5 and bought 17.5, may not be worth it. 58 minus 19 divided by 2 divided by 500. No, 3.9%. Skip the put side on this one. American Airlines, nope. Gold, we already looked at gold. The XBI, I have our position open already. Altria, must have earnings coming up. Earnings on February 1st. Skip. Jets, GameStop, no. Taiwan Semi. They have an event on the 10th. Monthly sales. I don't see why that's on the calendar, but okay. UNG, Tilray, Coca-Cola. I love Coca-Cola. Earnings are February 13th. I wonder why they're on this list. Call side for Coca-Cola. Nothing. Put side, skip. Lucid, Bristol Myers. They have an event on the 4th. The Goldman Sachs Healthcare. Blah, blah, blah. It's unscripted, too. That's good to know. Let's take a look at Bristol Myers. They had a bunch of acquisitions at the end of the year. Earnings are February 2nd, exactly a month away. Man, I wish I sold the put side last week. That would have been nice. If you sold 48 and bought 45, 46 minus 20. 46 minus 20 divided by 2 divided by 300, 4.3% there. Call side, skip the call side. Wells Fargo, earnings coming up. United Airlines, earnings on the 22nd. Johnson & Johnson on the 23rd. CCJ, we traded this one last year. Must have earnings coming up. February 8th, so we've got some time. No specific news here. Should catch a bounce around 39.5, 40-ish. Should catch a bounce around 40 for sure. If you sold the put side, if you sold 35, this makes sense. When are earnings on this one? The 8th. Look at the run this thing has had since the bottom in 2020. It's gone from 7 to 41. Okay, I think what I'm going to do on this one, and I don't do this often, I'm just going to sell the put without buying the farther out strike. I'm just going to sell the 35 on its own. So if you want to do this in a cash secured account, you need $3,500 to do it. Oops, hold on. So I'm just going to sell one February expiration of the 35 strike put. Limit credit of 48. Okay. So if you're following along with this one, you need $3,500 to do a cash secured, or you need level 3, I think, or level 4 options to trade this one, okay? If you don't have enough money. But if I get assigned this one, no problem. I'll move it to another account and hold the shares. Preview this. Sell one February, 35 put, $48 credited. Go ahead and send this one out. What's the yield on this guy? 0.21, that's nothing, but still. Cool. Moving on. Actually, you know what? I think that'll do it for today. Let's go back. So if this position gets filled, 48 divided by 2, 24. So if this short put gets filled, we'll set a buy to close order at limit 24, good till canceled, okay? Cool. I think that'll do it for today. All right, Happy New Year, everybody. Thank you for tuning in. Tune in every morning at 7:15 a.m. on the West Coast, 10:15 a.m. on the East Coast. We go live every morning trading options. Tell your friends who are also trading options to tune in as well. Like, subscribe, all that good stuff. All right, a good start to the new year. We got our TLT position filled. This is going to be a fun one this year. I know it. It's going to be very volatile. All right, see you tomorrow.